Okay, well, what a day. Rudy here, 9th of March. Welcome to the Public Daily Investment Show, where we go through ASX US indices, subsectors and commodity prices, looking for places to invest. So I don't know how this short, sharp attack's going on, and they're pointing the sun as the new takeover. Anyway, we'll get into oil. And what I reckon is going to happen there. So let's start with our share market. So we're off 3%. So we've tested this support level here. So we need to look at the first of the big sectors. So financials. So we'll get a daily chart. So there was a bit of recovery basically in the afternoon. So he's technically still above support. So CBA at support. The materials sector, that got hammered more. That was down 5% today. Financials down 2.6. So they're down to the 20 weekly. So we haven't been here since August last year. So that's a good shellacking there. Short term. The energy sector, XEJ, up 2%. So that's basically where you wanted to be. If we look at the energy over the financials. Way to get the ASX one. So energy is still outperforming. That's where the switch was on. Our gold miners, so they didn't escape. I'm surprised the gold price. We'll get into that. So our Aussie gold miners. So again, nothing disturbingly broken. Our tech sector. So again, they were down, but still looks okay. Again, nothing broken. Discretionary sector, XDJ. So that's been walloped for a while. We'll get on to interest rates. The REITs, rising rates, don't want to be there. Okay, so the VIX has spiked. So now we're going to have one of these capuchas. We'll have a look at the futures. So this is the S&P as of Friday. If we look at the futures, so this is current live pricing. So we're at, you can see we opened today. So we opened here and it's come down, and now. So I think this 6,500 will probably hold. It's a test of the 50 weekly. So we're at 6.6 now, so you could have another 100-point drop tonight, but I think we'll find good support around here. The Nasdaq, so that's as of Friday, the Nasdaq futures. So again, that's at the 50 weekly. So it is. We are at. If it does fall through, then then we're in for one of these things. So we're not out of the woods yet. And not helping this is, as you might have heard, private credit. There's been a sort of increase in halting of redemptions. So this is a ETF VPC of all those private credit companies. So these are the ETFs you invest 16% income. So is it worth is it worth it? Now the financial sector, the XLF, because that's just that's a sub segment, but it's is it a cockroach? So this sector here, the XLF, which has got guys like JP Morgan in it. So this is Friday. Now these big banks do lend to these private credit companies. That's where they basically, these guys borrow from the big banks and then go and lend it out. But it's not a big proportion. It's usually around 3% of their loans, so it's not gonna. It shouldn't. We shouldn't get a GFC. The software sector in America, so that looks like a rebound. That's about the only thing that's going up over there. So materials over in America was down, so that'll probably come down tonight. The energy sector, so that's going to keep ripping over in America. The gold miners in America, so they might pull back a bit, but still the uptrend is intact. Emerging markets. So again, so you can see we're just coming down to some long-term support levels. I think will be a good buying lot, depending on what sector. Okay, so your super fund. So your high growth super fund was down 3% today. So that's very interesting. So you're now back to where we were in July last year. Anyway, VGS. So VGS hasn't escaped. It was down 3% today. So will this support level hold here? We won't look at that. Okay, interest rates. So Aussie 1 year, where it looks like that petrol and food. We'll have a look at food. So 10-year rates going up. Aussie 1 year, Aussie US 1 year look like they're going to break up, but haven't yet. US 10-year. So the bias is to the upside. So it'd be interesting. The Fed's going to be stuck. Employment numbers weren't that great, and high inflation. I think they call that stagflation. What does well in stagflation? We will get to that. The US dollar. So a bit of flight. So the US dollar is basically the flight to safety at the moment. So our Aussie dollar. So we're just pulling back a bit. So the US dollar is probably going to hit some resistance at the round 100 number. Okay, the Bible, our channel's Bible, $10 a month. Join the channel. ASX US shares and ETFs, all to do with this thing here, the commodity index. So it's breaking out. If we compare it to our share market, our general share market, so you can see, so commodities is outperforming our share market. And if we compare it to the S&P 500, so you can see we're now, so the commodity, so this is what we're in for. It's just commodity prices outperforming the share market. So it all started with this guy, gold. So gold's hanging, usually with war and all that, you'd expect this to be going a bit higher. But that's, I reckon it's a good time, if you don't have any gold, to get some. Aussie dollar gold, looking fine. What's Bitcoin doing? Nothing. Okay, the girlfriend, so silver, she's looking pretty, looking very pretty. Got the big rounded bottom going on there, so all good. Copper, So copper is hanging in there. A bit of, do people filter through to slowing economy, less copper? Well, that's the negative. That's the bear phrase. I don't think so. We're still going to build data centers, electrification. So oil. Thought this was a good one here. She wanted to have dinner somewhere really expensive. The petrol station. Okay, so oil. What a ripper of a bar. Oh yeah, this is a message from a sub today. Hi Rudy, happy Monday mate. Just wanted to say thanks so much for the exposure to energy. It would have been a lot harder today. Yes, I think that's the only thing that saved us. Okay, so oil's looks like it's going. And we've got target price, we've got flag poles, we've got two flag patterns here. We've got a flag pole and a flag, and another flag pole and a flag, and they both end up at $200. So I can't see this war stopping. So we're probably looking for a shoot up and then a comeback, and then rip again. But you can see we are at this resistance here. But I don't think we're coming back down to 60 anytime soon. But one thing to note though is, so that's good for people selling oil into spot. But most of our natural gas sales are done linked to this thing here, the JCC, the Japan Crude Oil Index. So even though gas prices, well, let's just so this JCC is basically it gets updated monthly, and it's based on the average price of oil paid in Japan for what they've bought in, and the average, and it gets updated monthly. Okay, so when a company is, like most of them do, they sell gas up into Asia at a linked price, and the price increase is linked to this movement here. So the oil could spike, oil price, and if it spikes and comes back, then it doesn't lift this. So it means, so if we look at natural gas, so this is in the US, this is Asian, natural gas into Asia. So if you're selling gas to Asia, if it's all at spot, then you're getting this. So you're kicking goals. But if you're selling all at contracted rates linked to the oil price, then it's linked to this. So you've got to pick your company, and if you're selling in the east, this is our East Coast gas price. So you can see there's no alarm here for East Coast gas prices. So companies that are selling, local gas producers selling into the East Coast, there's no giddy up. This is gas prices into Europe, gas prices into UK. Okay. Now iron ore is looking bullish. You wouldn't have thought that, would you? Talking about China's got big stockpiles. But this chart, I had to redo it because it was getting... So I can see a rounded bottom here. So iron ore going up. Lithium still all-time highs. Uranium chilling. It's a very inactive market, uranium. So thermal coal. So that's thermal coal here. That's the price. So it's spiked back up. That's because the thermal's used to generate electricity. And coking coal's crapped itself because it's more linked to steel making. Okay, and then we've got our food, soybeans. Soybeans breaking out. Corn breaking out. Wheat breaking out. And hogs. I'm waiting on hogs to break out. So these are all ETFs you can buy on the US. So there's a consolidated one you can buy. Join the channel, $10 a month if you want to get involved in all this space. All right, I'll see you tomorrow.